Good afternoon, ladies and gentlemen, and welcome to the Way Education PLC preliminary results presentation for the year ended 31st of August 2020. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and could be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Simply type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Barry Whipp, Chairman, Jacqueline Daniels, CEO, and Barry Nicholls-Grace, CFO of Way Education PLC. Good afternoon.
Well, good afternoon to everybody. Thank you very much for joining us. Jackie, Barry and myself look forward to telling you a little bit more about Way and the results for our previous financial year, ended in August. Unusually for a public company, we run to a school year. So bear that in mind, if you would, during the presentation. You're not here to listen to me, you're here to listen to Jackie and Barry. So Jackie, would you kindly take us away, please?
Thank you, Barry. Yes, good afternoon, everyone. It's good to see everybody here. Before we dive into the financial performance of Way, I'm going to take a couple of slides to give you a better insight into the setting in which we perform, because that's important, particularly as we're an education business. So when we're talking about outputs, which is what you want to hear all about, it's important to understand Way's purpose. As we're an education company, in order to achieve the rate of growth that we are currently achieving and go beyond that, which we intend to do and are doing, there must be a reason why somebody is better off with Way. And I'm pretty certain that you can all read, but the success and freedom in our purpose is the part that's life-changing. So basically, we are changing the path of the future for those pupils who are with Way, and often of their parents as well. And that's quite important to remember. We only get one opportunity to do that. And that's why we know that we can achieve our vision for growth. They are linked. So let's turn to the vision for a moment. We have a market opportunity. We're in a good position. Some of you will know that a couple of years ago, we consolidated our business and focused on our core entities. So that was pretty much our domestic market. We had to do that necessarily. Our former chairman retired and sadly subsequently passed away. And so we dismantled some overseas entities and really focused on the core business. At the same time, we were growing, and part of our mission that we set this time last year was to grow to the size of the largest UK secondary school. And we've done that. We did that in the first half of last year. And we've been, since then, articulating our innovation and really driving home that we are leading in online services overseas, in our overseas territories. We know where our markets are overseas because we have a significant inbound. It's around 40% of our market is international. And so now we are developing our international hubs in those markets. So that's our market opportunity in this vision. I've put up there AI and VR, so let's turn to the technology for a moment. We're an online school, but that just really represents where we exist. We exist on the internet, but we're more than that. We're a virtual school. And what that represents is a much more futuristic, a much more creative, a much more imaginary and delightful environment. And we're branding those sub-elements. So we have a virtual campus, it's Way Virtual Campus. And this continues to give us the leading edge approach that we already have. And indeed, it gives our students a school that they can proudly belong to. I've also put up there an app that's an icon that says Learning on Demand. And I'll describe that for you as an Interhigh app, where you choose your lessons, perhaps on a mobile device, choose what course you want to do, what you want to learn, pay your fee, and you're in. Away you go, completely seamless and frictionless. So how are we going to achieve this vision for growth? Well, in 2019-20, this last academic year and financial year, we continued to do what we do well. We are a British international school. We are a beloved brand. We have lots of inspiring stories and lots of feedback every day to demonstrate that. We have this year brought in a director of education and a director of marketing and a CTO as chief technical officer. And we are now have the opportunity to export that British curriculum, that British international school, that British high quality teaching to our international markets. And by using our virtual libraries and our quests and our trails and our virtual lesson settings, we can create a better learning performance. That's what I mean by world-class user experience there. And so ultimately going forward, our vision is going to be to broaden our offer and broaden the sector that we service. But before I talk about that, I want to explain to you, I want to talk to you about the customers in our current sector, because that's important. Things change, and now we're at thousands of students and not hundreds. It was important to understand our market going forward. So what we did this year is we undertook extensive research on our inbound market. We had external consultants conduct interviews and questionnaires, not only with staff and pupils and parents, but with our alumni, with those who were starting to consider online, with those who definitely weren't, with those school leaders up and down the country, and all those that we could prospectively work with. And they broadly fall into 4 categories: career teens, geographically mobile, socially displaced, and behaviour issues. They're very broad categories, and there is a lot of differentiation, within each category. But the common need is flexibility. Flexibility allows those students to use Ways service in a way that best fits their life. Some see that flexibility as freedom, some see it as control, some see it necessarily as both. And it's essential to split those customer groups into Inter-High and Academy 21, and I'll explain why now. In Inter-High, we have career teens, so ambitious young people who need the flexibility and freedom to learn at their pace and their time while they pursue excellence in their chosen arena. So that could be performance, that could be sports, athletes, all sorts of things. We also have those families who wish to, they live overseas and perhaps are traveling, but the important thing is they want to retain a link to UK education. They want a pathway into a UK university. And whether they're coming to us through a B2C channel or whether it's a B2B buyer representing the parents, these parents are active in their child's education. They're not complacent. They're very much interested in how they're doing in school. In Academy 21, these are children who have been what we call socially displaced. What that means is they may have been dealing with things like social anxiety. They may have been dealing with bullying. It may have been so adverse that they've become school refusers. They may have been placed at home because they're very ill. And they're looking for an alternative that gives them back control over the school part of their life. Another category is those with behaviour issues. They can be quite mild, they can be perception disorders, or they can be quite severe behavioural issues that have forced the school to perhaps remove them from lessons or even remove them from the school. But that school is still obligated to provide them with an education service. And the buyer in this instance is usually an educational needs leader of some sort. These are very diverse groups of students. So what's our brand positioning? Well, the reality is that everyone learns in their own way. And the problem for most students is they struggle to connect in a very rigid, traditional, mainstream system. I'd go as far as to suggest to you that it's outmoded. We know that from talking to employers. We know that from the fact that they're saying schools aren't producing the critical thinkers, they're not producing the decision makers, the qualifications aren't fit for purpose. And so many students are struggling with that system. And what we're doing is offering every student in every category the opportunity to chart their future pathway to reach for their own success. It gives them the confidence, their mind is open up to see the new possibilities in their life. And like I said earlier, we have inspiring stories every day. The platform that we operate on allows the teachers to let their love of the subject matter really shine through. They're able to demonstrate empathy with the students and really encourage and establish a trusted relationship with each and every student. It's quite a personal relationship, and the platform allows that to happen. I've called it eye-opening technology, but we create virtual experiences that bring life to the classroom and increase the students' involvement in learning new concepts. And so they start to love learning. We're part of the inflection point of change. As society continues to adopt new technologies and possibilities, we already saw how virtual education prepares students for success. And we are part of defining the future of online learning, but more importantly, the future of education as a whole. And the last sentence up there, business is about people, is obvious, but for a team to be effective, they have to have listened, they have to have observed and have worked together. We've had 16 years of delivering to tens of thousands of students online learning, and we've exceeded in meeting the expressed needs of those students, but more importantly, the unexpressed needs of the students and of the parents. And that keeps us ahead of the game. Our rate of change internally is greater than the rate of change externally. And that's very evident in our thought leadership now. This has created, this is what's really created the financial highlights that I'm going to ask Barry to just take you through a moment now.
Thank you, Jackie, and good afternoon, everybody. So to just really frame the year that's just passed, before we go into a little bit more detail, this has been a year of significant growth. It demonstrates the trajectory that we're currently on. It demonstrates the momentum that we have built and we are continuing to build. And it demonstrates the platform that we have for future growth. So revenues have increased this year by 40% to take us to 8.4 million. We've reported a statutory profit of £500,000, which is the first significant profit for Way. On an adjusted profit basis, we're reporting a profit of £651,000, which has more than doubled from the prior year. And meanwhile, we are continuing to generate cash. So our cash balances have increased to just over £6.5 million at the year end.
Thank you, Barry. I'll go to some operational highlights. So from an operational point of view, we've achieved our first milestone. We said we wanted to become the size of the largest UK secondary school, and we ticked that box in the first half. Then we said we were going to look at the education service and the way it was delivered, and so the setting that we operate in, so the technology, but also the activities and those processes of creating our markets and communicating with those markets. So what we've done is we've developed quite separate but interdependent strategies for education, for technology, and for marketing. And so now we've really geared for expansion. We have the opportunities in the market and we're taking advantage of them. Just by creating this world-class user experience that's frictionless, it's exciting, it's capable of delivering and evidencing the success and freedom that I talked about earlier. And this is what's going to allow us to get to from the size of a largest secondary school to the size of a multi-academy trust. But don't take my word for it. Barry's going to provide you with the evidence that we've met those milestones. So can you talk me through the revenues of this year and the growth rate?
Of course, thank you. Now, I'll take you through the evolution of Way over recent years, because as I understand it, there are a number of non-shareholders here, and it may be interesting to give some context to the growth story to date. So Way in its current incarnation really commenced in FY16. That was the first full year after Way had acquired Interhigh. So we delivered revenues of 1.5 million. Growth then of 60% to FY17. In FY18, we acquired Academy 21, and that's where we are today with the two clear brands. Further growth then of 42% to FY19 and 6 million. And then a further 40% growth in the current year to 8.4 million. So that represents a compound growth rate of 41% over the period. Now, that growth is occurring in both brands, Interhigh and Academy 21. It's occurring evenly, and it has done since we acquired Academy 21. So there's consistent growth across the two brands. Drilling down into the relative performance of each half. If you take a look at the H1, H2 revenue splits, there's a clear weighting in the second half that is better than our expectation. We were expecting something closer to a 50-50 split this year. We'd started very strongly, particularly in business to business, and we'd anticipated a 50-50 split in revenues. Now, we can't talk numbers today without talking about COVID, and COVID's clearly had an impact on these numbers. If you look at Interhigh, we had a lot of parents come into, well, homeschooling for the first time, and certainly online schooling. So we had huge amounts of interest when schools closed down at the end of March, at the end of spring term. So the impact on the numbers for this year is really only the final 4 months of the year, that summer term period. In Interhigh, we tweaked our offering a little bit to allow a shorter term provision for parents to cover that school closure period. And that brought in a reasonable amount of revenue in the final period of the year. And what that also allowed is conversion of some of those students into full fee paying students. So it was very much a try before you buy approach. And those pupils, some of them have indeed converted into full students for the coming year. In business to business, as I said, we started the year very strongly there, but we felt that we were on track to really beat our own targets for business to business. And Jackie will talk a bit more about the why in a little while, but we didn't quite achieve what we felt we could have achieved because schools pulled back a little bit from that sort of provision in the second half. So overall, a very positive COVID impact in the main, with just a little bit of disappointment in business to business division, but overall we're very pleased with how the year has panned out. Moving on to look at gross profit margins. We've long stated that our intended gross profit margin is 60%. Now, as Jackie said at the very beginning, you have to remember who is at the heart of our service here, a child. And we have one opportunity with that child. So as a for-profit company, we have to balance our financial performance against the long-term sustainability of our provision, the educational quality, as well as the educational outcomes that we seek to achieve with our students. So we've achieved that 60% margin, and we believe that we can continue to achieve that on an ongoing basis. In the first half, we overperformed against that slightly because we had such a strong start. In the second half, we were slightly below that. We talked about it in the RNS yesterday. We have restructured the educational function to allow us to grow from what was suitable for a school-sized structure to one for a multi-academy trust. So those costs came through in the second half, but those are costs that will be fully absorbed into the model going forward, and we should be able to maintain 60% on an ongoing basis. On the pricing front, we are consistently able to increase prices by around 5% per annum across the full fee portfolio. And we don't get a great deal of resistance to those sorts of increases. So it's fair to say that we've got a very balanced set of levers here to deliver educational quality and to deliver strong margins as well. Moving on to overheads. Now, overheads have grown significantly in the year. So we've gone from 3.5 million to 4.4, just shy of 4.5 million. There's a few things behind that. Marketing is clearly a significant expense for us. So marketing was approximately £1 million of that expenditure last year versus 600,000 the year before. Jackie will give you a lot more detail on our acquisition costs, the cost of acquisition per student, as well as our lifetime values, and really demonstrate the payback on that marketing expenditure. It's fair to say that a lot of that expenditure did occur in the final quarter, which had no bearing or impact on the FY20 numbers. That will have an impact in FY21 just by the virtue of the timing of our year end and the timing of the academic year. So it's fair to say that we could have comfortably beaten the profit forecast of £500,000. However, it's in the current environment and the opportunity that we have, it's of course rational to increase expenditure in marketing to capitalise on these sorts of opportunities. We've also expanded the executive team again to support that growth, but those are one-off increases in nature that, yes, the costs will recur. However, there wouldn't be any further expansion of the executive team. We've added a CTO, a marketing director, and a director of education during the year, which of course has added to those costs. Now, if you strip out those marketing costs, you can clearly see that there's an element of gearing that's developing within the model. So if you strip out marketing, the gearing's improved. So overheads have gone from 48% of revenue to 40% of revenue, and we see further improvements there. And some of the investments that we're making will certainly facilitate further improvements there. On an adjusted profit basis, looking at the full P&L, as I mentioned at the outset, a statutory profit of £500,000 for the year. We've also recognised deferred tax assets relating to the brought forward losses on the basis of our profitability and expected future profitability as well. On an adjusted profit basis, we've reported an adjusted profit of £650,000, which has more than doubled year on year, which further demonstrates the gearing effect that we have seen. From a cash flow point of view, we are generating cash. We continue to generate cash. I'll zone in on the line just above that first yellow block. Deferred income, receipts in advance and refundable deposits. Students place a deposit with us as they do at typically at independent schools at the start of their studies, which is refunded at the end of the studies. Those balances clearly grow with growth in student numbers. And we've also seen a large increase in the number of parents paying upfront in full for the forthcoming academic year. So that really demonstrates the strength of where we enter the coming financial year. From the point of view of the balance sheet, we've not seen any particular increase in trade receivables. The receivables balances overall have increased, largely driven by timing issues around things like card merchants and retentions by card merchants. The trade receivables themselves have remained flat, which has led to a drop in debtor days. And we've been very supportive with parents through recent times. There's clearly the last thing we want to do as an educational provider is cut off access to education for a child. So we've worked with parents very closely, but we've not seen any real issues with bad debt or any uplift in bad debt in result of the current economic situation. It's fair to say that overall we are very pleased with how the year has progressed and how we've progressed as a company. But I'd say we're more so delighted with the platform that we've got entering into FY21 and beyond. We've really laid those foundations now to scale to our sort of mid to long term targets. So I'll pass back to Jackie.
Thank you, Barry. So let's talk about investment a moment. I said earlier that we invested in the education strategy, the technology strategy, and the marketing strategy. The education strategy has 4 programs to it. The quality program is extremely important. Quality assurance is one of our single biggest catalysts for growth. Okay, and so this program is a quality framework that has a 5-part plan to it. There's things like monitoring and reviews of subjects and reviews of faculties, you'd expect that. There's school reviews and implementation plans in both Interhigh and Academy 21, you'd expect that. There's the evaluation of the education strategy as a whole, so what impact is this strategy having on our growth? And then online educational standards. That's probably the most significant from your point of view, because evaluation is a tool for both internal but external accountability, and checking the impact of our drive for continuous improvement. The DFE registration process is also a very significant catalyst for growth, particularly in Academy 21. And the online education standards, the OES, for some of you who may not realise, nearly 2 years ago now, the Department for Education asked us to help them in drafting some standards to start approving online provision. We did that, and they are now approved in full by the Department for Education. They exist. They are the OES, Online Education Standards. And they are to be applied by a quality assurance body according to the context of the provision being inspected. So how is this going to work? So going forward, every online provider, initially voluntarily, but quite soon compulsory, will have to register their provision with the DFE. The Quality Assurance Bureau will then do some due diligence checks, and they will inspect that provision against those agreed standards that we helped draft. If they meet the standard, they'll be able to use the term accredited provider, and they'll have a unique reference number, a DFE number, and they'll appear on the GIS. So that's the Register of Schools. Where are we with this? Well, the DFE were due to appoint a QAB in August. They haven't yet done that. There's been a bit of sidetracking with, obviously, with school closures and exams, but they assure us it's more important now than ever, and they're in constant contact, and that will be happening very shortly. And that's quite significant because, like I said, it will soon become compulsory quite quickly. We know how this works, and any competition will need to invest quite a lot. We know what these standards are saying because we wrote them and we prepared them. The second part of the strategy is the Learning Development Programme. So basically that refers to the learning process. It refers to raising the quality and raising the sophistication of that process. We have something called the LEAR model, which we've designed ourselves. We are going to brand it. And it's a pedagogy that's been designed specifically for online, but it has it's been backed up by quite a few years of important research that's been published. So basically what it is there are different modes in which students learn. They are called Learn, Explore, Apply, Reflect. And there are different ways of teaching, different modes of teaching in each of those learning experiences. And there are different classroom approaches to each of those, and different technology is used appropriate to that learning mode. And this is unique, and it's not something that has been done in a physical classroom because you're not able to. You're not able to change those modes of learning at the flick of a mouse. The Learning Experience Programme is linked to that, but it's more about the software. So it's more about the experience that that student has in terms of the virtual libraries, the galleries, the trails, the science labs, but also the less obvious areas, the social areas, the alumni. We have software that deals with well-being, so students can actually put into that software It doesn't only measure how they're reacting and how they're engaging, but what mood they're in today, what they're happy about, what they're not feeling comfortable about. And that data is tracked all the way through. The professional development program has got the obvious things in, like leadership and management, but it's also about self-organizing teams that are created to focus on gathering the right skill set among the team, not a particular unit. And what that does is it brings higher agility and adaptability to change, which is what you need in our growth environment. In gearing for this massive growth, the people in the business need to be agile in their skill set. If I move to the technology strategy, our CTO has been gearing and enhancing for this tens of thousands of students. And I've just taken 4 examples there. The education content. So we've been investing in learning design that creates new course materials, new course templates, and this has created some automation and some consistency, as well as the creativity. If we look at the delivery of that content, I said earlier about the creative, the interactive, but probably just as important from your point of view is its data embedded. We have to provide evidence of learning. It's no good just having a wow factor. You can't just put on a headset and say, "Oh, look, I'm learning about the moon today." There's no data embedded in that scenario. So we're working on environments that have all that embedded. In the operations part of technology, yes, we're increasing processes. We've got much more automation. We've got much more seamless processes. But there's also, tech dashboards with other KPI data. We've moved all our software onto high performance clusters. We have an intranet where all the data is centralized. And the last thing I picked out there is structure, because that's important in any gearing. If we're going to go from thousands of students to tens of thousands of students, we need to have the analyst, the cloud manager, the service technicians, and the developers and the UX department to go with it. So that's all geared up ready. Lastly, we've invested in marketing. Usually what people think of is recruitment. And yes, that's an important part of our marketing, using our advertising mix. And enriched marketing is another very important catalyst for growth. We've got a lot of marketing automation. We've got a lot of sophistication on our modeling. I can tell you, for instance, that our cost per registration, if we take one single channel, so let's take our PPC channel. It's a channel we've used for many, many years. It's very sophisticated. In 2018, it was about £300 of PPC to get to a registered student. Over the summer, that was as low as £48 because we created the virtual summer school that was designed specifically for helping those students that have been negatively impacted by the school closures and were behind on certain subjects. Going forward, I'll be able to give you very detailed data through any particular channel. But today I can tell you that between August 19 and August 20, it cost on average £700 to acquire a student in Interhigh. Another significant part of that strategy is retaining students. So this is all about our touch points. Parent familiarity with online learning is another catalyst for growth. And retaining them is about our quality programs that I talked about earlier, the flexibility, that brand development, and those processes that build routine, that remove friction and build routine to upsell. The customer lifetime value in Interhigh is in excess of £5,000. So that's around 18 months. And that includes very short-term provision, like the summer school, which, parts of that were 2 or 3 weeks long. So it's an average of just over £5,000. The refer part of that strategy is also very important. So that's where we're attracting students, what you would call word of mouth, but what we're doing is using our current customer influencers. It includes our PR, our key opinion leaders, our celebrity ambassadors. You'll know that we use Colin Jackson, that we've got Frankie Bridge and others who are shouting out about the credibility of our provision. And it includes our awards and commendations relating to education. And the investment in that refer piece is really becoming evident now in the thought leadership that we have published regularly in mainstream articles, not just on education and technology, but on learning more generally and things like the effects of the pandemic on learning as a whole. Which brings me to COVID. I didn't think I could get away with a presentation today without mentioning COVID and its impact on WAY. Hindsight is a wonderful thing, but I can tell you that we had to be required to change our plan in marketing. In our PPC, for instance, before COVID happened, we'd introduced what we call a top impression campaign. So that's a campaign that captures the #1 position of a keyword search. So something like homeschooling or online learning. And the outcome of those campaigns during the lockdown, didn't add value. In fact, it actually added to our CPR, our cost per registration. And this was because competitors that were springing up, like Google Hangouts, etc., were bidding on that figure and driving up the CPR. Conversely, I can tell you that this year, so September and October, looking at our ad campaigns, if I didn't know about COVID, I'd be saying to you, there's a significant external factor that's really positively impacting our spend. And of course, that's the COVID effect. So that's a positive effect. I've put up there school closures. Schools closed, as you know, at the end of March until June. So it only affected our revenue in that last term of the academic year, the summer term. And in Interhigh, it impacted it positively. I've described the virtual summer school, but there can be no doubt that we also had a greater number of inquiries. They were green inquiries. These weren't people that would have normally perhaps been searching for online education. I do know, speaking to my colleagues across the globe, I think every CEO in online learning, and I'm talking globally, is in agreement that the pandemic has really brought the adoption of online forward by about 5 years, which is quite interesting. But these were green inquiries, and the rate of conversion that some of you are hung up about, anybody who tells you what that is guessing. Yes, we have an immediate rate, which is quite low. We can tell you that some of those students in the summer school that were designed to help them with their GCSEs enrolled in September. But we're continuing to see the effect of that. That will be a longer term conversion, okay? In Academy 21, the impacts weren't quite so positive, although we were on target. In the summer term, we would normally expect to see schools purchasing in that summer term who didn't purchase because, as Barry described earlier, they decided to use the same provision as they were going to use for all their other students. But we're seeing that coming back now. Exams, as you know, there was a lot of distraction around collecting evidence with a government and an exam board that didn't know what evidence was going to be needed, and a lot of our candidates were denied entry by their centre. We had to rescue around 400, 500 students and enter them through our own centre. So the challenge ahead, there's definitely an impact, a positive impact, but there are impacts that are less positive, like the ones I've just described. But it's time to challenge prejudice. We've got a very powerful story of evidence. So going forward, to conclude, at the half-year results, we said we were going to implement our new education strategy. That's exactly what we've done. We said we were going to further refine the technology strategy. That's exactly what we've done. We said we were going to operate integrated marketing strategy. That's what we've done. So going forward, we are going to continue investing in this virtual campus. We're going to be exporting our international school. We're not going to be opening entities back up in China, in Africa, but we are going to be investing in our international school hubs. And we're going to be doing some more work on removing that last piece of friction and becoming more of a SaaS model in our learning on demand offering. So basically what I'm saying to you is we're exactly where we need to be. I'm extremely pleased to present these results to you today, and we are geared to meet that vision of becoming the size of a multi-academy trust within the next 2 years. Thank you very much.
Thank you very much indeed. Thank you very much indeed. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the top right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. Lastly, before I hand back to the Way Education team, I'd like to remind you that your feedback is important to the company. Immediately after the presentation has ended, you will be redirected for the opportunity to provide feedback in order for the company better understand your views and expectations. Perhaps before we look at the questions submitted during today's presentation, perhaps I could ask a pre-submitted question we've had in, and Jackie, perhaps I could address this to you. It says, at which stage are the majority of new students into high? In the past, most students were at stage 4. However, you wanted to focus more on younger students further on.
Yes, it's an interesting question, actually, and one I was discussing with the finance director earlier today by coincidence. The school still bulges at year 10, and that's not surprising because in Academy 21, the products there, like GCSE Rescue Package, are designed specifically for that. So there's no surprise there. However, what we've noticed is the year groups from September this year and October, the year groups in the lower years, so Key Stage 2, so years 4, 5 and 6, have seen the biggest percentage growth. Okay, that doesn't mean to say that they are as big as year 10, but that's where the growth has been for September and October. During last year, they all grew at about the same rate. So what we're seeing possibly is the flattening out of that bulge going forward. But like I say, that's not surprising when we've got products specifically for that purpose.
That's great. Thank you very much indeed. I know I haven't given you long perhaps to review some of the questions that we've had in, but if I could ask you just to click on the Q&A tab and respond to those where appropriate to do so. If I could ask you to please read out the question and say it's from, that'd be fantastic. Thank you.
I'll handle that for you, Paul. Mark has already guided me in the usage of it, so I shall go ahead. Nicholas asks, why did a lot of the board sell half of their holdings recently? Well, compliance on AIM is quite difficult in as much as the directors cannot sell shares at any point when they have information that the market does not. That restricts us quite dramatically, in fact, to only a few months of the year. During the period in which we sold, there was very strong small investor demand for the stock, leading to quite volatile conditions in the market. At that point, we chose to sell some shares in the company. We still hold shares in the company. We're still committed to the company. To a degree, that's how the market works. And we make no apology for it. We have the right to buy and sell stock. And that's what we chose to do. Keith R., thank you very much for the question of not updating the markets in respect of the first 2 months of full year 2021 and inclusive of the numbers therein. That's simply because we get many questions regarding market updates throughout the year. So we will get questions based upon what is the status of the company after first quarter, what was the intake in September, what was the intake at Easter, would you like to do a trading update at the end of the year, and what is your preliminary update somewhere around 2 months of the year. Frankly, AIM compliance gives us enough work to do without updating. And also in these first 2 months of the year, there's still uncertainty. There's uncertainty from school budget selection in Academy 21. There's uncertainty from people that join in the early part of the year and decide to go on for full year or decide to terminate during the year. So there's uncertainty, but the main reason is for the fact that we have plenty of reporting to do. We do it as best we can. And of course, if there are market updates in respect of the AIM rules, then we're forced to announce those at exactly the moment that we know the answer. Nicholas S., you have 3,000 pupils now, and the website says Academy 21 supports over 1,000. No, that doesn't mean that Interhigh has 2,000. We support over 1,000 Academy 21 learners, but they're not with us the entire time. Some are part of the year, some visit us for certain periods and then go back into mainstream education. Some of them even graduate into Interhigh. So that's the number of students that we support in Academy 21, and there's not an easy deduction to do that. We don't have a figure on the E&W, we don't have a figure on the conversion rate of COVID students. We don't know who the COVID students are. We have a good idea, and some of them tell us, but not everyone does. So there was, as Jackie alluded to earlier, there was demand in the market pre-COVID, post-COVID, during COVID. So we don't have a conversion rate for the COVID students, and we don't refer to them as such. Nicholas S., what do you intend to do with your cash, acquisition or divvy? First of all, acquisition. It's my job to remain open to M&A work. We would very much like to acquire more students with the use of the cash that we have. And then fundamentally, we have to find the right opportunity. We haven't found it because a lot of the expectations of sellers are that we will be acquiring physical buildings or indeed paying for education platforms. And we need neither. So we're trying to deal with an expectation on the sales side that we can't match on the buy side, but we do remain open to it. There's another question on dividends earlier. I'm afraid it's a 50-50 balance. We're often encouraged by larger investors to spend every penny that we have in the business on growth and expansion, and to not return capital to the market. There's also been a slight restriction in respect of the fact that we had 3-year tax investment funds, and that's there's not a strict rule on it, but it is implied that you won't pay dividends within the 3-year period. And of course, this is the first year since I've been chairman anyway, and the first year in some years of true profitability. We're not ruling out paying dividends, and we're not ruling it in. There is almost an equal balance between the demand. The mix of revenue, Mazin S, in respect of A21 and Interhigh, has traditionally been about 2/3 in Interhigh, 1/3 Academy 21. We actually don't know how that will pan out, because in Academy 21, effectively, we're order taking from schools and local authorities, and to a degree corporate business. But we've continued to see this balance prior to COVID, during COVID, etc. It tends to pan out, but I can't give you a prediction on where that will pan out. James H, thank you for your positive comments. It's nice to get them. The performance has been great. Thank you for that. The foundation day, thank you for that. Are we able to offer any guidance? Well, the only guidance we can give you is that published by WH Ireland, our broker and nominated advisor. They are forecasting in excess of 10 million of revenues this year, and in excess of £1 million worth of profitability. So once we've got some calls out of the way in the next day or two, we better get focused and back on running the business, because again, we think that will be an impressive result. Abiyar, I'm dominating the questions to get through them, but I'm going to ask Jackie to answer this one because she's much more qualified. Jackie, In response to Abiel's question, what would you say is the greatest barrier or concern to a parent taking a child out of mainstream education and into way education? How do we deal with that?
Okay, that's a good question. And the most common, I wouldn't call it a barrier, but the most common question we get asked is, what about the social side? And we deal with that because we've invested along the way, not recently, an awful lot into developing that social side. It's not just online lessons, it is a virtual campus. And the way we deal with it is we suggest to them that they might want to, what we used to call a half-term trial, but we now have a half-term rolling contract. And the conversion rate for those is extremely high. It's something like 80%, because they very quickly realize that actually it's more sociable than the local playground. But that's the initial question that we get asked, and it's a very good one, Abby. Thank you for that.
Thank you. Jeff J has a question about GCSE results and how Way compares with the average schools. I know the answer, Jackie, but you'll be more qualified to give it.
It compares very favourably, Jeff. If you look on the website, I'm not sure if last year's, as in the year before last, because I'm not kind of counting these exams because of the way that, you know, it happened. Obviously, those results are on there too. But you will see that we compare extremely favourably. In English language, for example, 92%. Of the top grades. So what you and I would probably know as A star to C, their numbers now is 92% of the students. So yes, very, very well indeed. And that's because of all the things that I've just described to you.
And how does that work with class sizes? Jeff is asking some good education questions here.
Okay. Class sizes, that's a good one. I spoke to you about the LEAR model, learn, explore, apply, reflect. And I also said that there are different classroom settings according to those different modes of teaching and the different modes of learning. So learn is where new content is being delivered, new information. That can be a masterclass. So that can be 1 to 100, okay? Because all that's happening is new content is being delivered. In the apply session, where you're applying that new content, those are more seminars. So they will be sort of 1 to 20. They can be, you know, they can be bigger, they can be smaller, but they tend to be where they're doing activities, virtual activities that are being monitored, applying that new knowledge. Then we get to the explore section. That's virtual trails and virtual activities. Labs and lab work and things like that. Again, that's usually around 1 to 20. And then we get to the reflect session, apply and reflect session, where there is assessment taking place. The child isn't aware, but the things that they're doing on the platform is assessing the level to which they've understood. And then the reflect session, lastly, is where they are looking back at the work that they have done. And that can be as small as 1 to 1. So that can be 1 to many, it can be peers, and it can be 1 to 1. So across what you would describe as a lesson, it's no longer as simple as sitting in a room with, say, 20 people or 30 people or 40 people. It's much more sophisticated than that. But most of the time, of course, it is 1 to 1.
Mazin, as we've answered the question on dividends, although I'm not entirely sure that it was a good answer, but it is the answer that we have. But you also asked which international markets we're targeting. Well, they're evidence-based. So we have a lot of applications for students, and indeed a lot of students from the Middle East and from parts of Asia. We're targeting some more growth there because we know that that market exists and we know how to deliver to it. We're quite careful in respect of international. We want to, as Jackie I think mentioned earlier, approach it with a hub and spoke effect and use agents where we can. We have a new agent in Dubai that's starting to work, and we're keen to pursue that. 30 to 40%, I think what I mentioned earlier, is the number of international students. And Leo H, some more opportunities for the 6.5 million of cash. Well, first of all, investment in augmented reality and virtual reality adds to our quality of education and our modernity of education. And there will be investments there. I can't say that you would see huge technology investments, and they are priced out based upon effectively lesson value. So that's one area. Secondarily, of course, there is the possibility of acquisition, which would use some of that cash. We invest increasingly in marketing. And one thing I wanted to point out was that the marketing spend, if this wasn't clear from Barry's presentation, increased by £400,000 in this year, and will increase again probably by a greater amount next year as we target the opportunities available to us. There will be a flattening of the curve and increasing in overheads. And I encourage you to think about splitting overhead out between marketing and non-marketing, because the investments made in Q4 were entirely for the benefit of 2021 and beyond. Again, Jackie, I know the answer to this, but you're better because I think you signed the check and then I countersigned it. Well, why do we choose LBC rather than Heart?
Okay, another good question, although we do use Heart as well. LBC was very successful. It's a specific market. I think what we were doing at the time was helping people understand that they could afford a private education. And that was a very successful campaign, so much so that we've rerun that. That's one of the channels that we'll use again going forward, because this is a very affordable education. Some of you will be familiar with other online schools and independent schools that are charging a lot more for their online offering. So it was really targeted at that audience, which we picked out quite significantly.
And for clarity, LBC, whilst it is London Broadcasting Corporation, is national in its broadcasting. Barry, as usual, I'm not letting you get a word in edgeways, but why have the shares outstanding been increasing?
It relates to a number of share instruments that have been exercised over the years. I'm afraid, Awet G, I'm not certain what time period you're alluding to there. But there were a number of share instruments exercised in September 2019. Those were in relation to the former chairman and his estate. That those were exercised. So that's the reason for the significant increase in number of shares outstanding in the period.
And there are quite a few share options still outstanding, Barry. Is that right?
They represent, I believe, just under 7% of share capital at the moment.
Thank you. Keith, I quite like your idea regarding recording an actual inter-high session for publication. Of course, we can't do it with any live students in any way for confidentiality purposes.
Can I add to that about, sorry to butt in, that you know that you can never stop me talking. Actually, that wouldn't be a very good marketing activity. What we do instead, because if you do that, you don't really have much information on those prospective parents and the students who are interested in that lesson. What we do instead is we provide taster sessions. So what you do is you sign up for a taster. It is an actual lesson. It lasts about 30 minutes. And that way we have the necessary information about those prospective students and their families.
Thank you. Well, that put me in my place immediately. So I'll concentrate on more factual items. Mazin, have we put up our fees for this academic year? Traditionally, we put up fees in the region of inflation plus. So Barry will nod his head enthusiastically when I say if you assumed in the region of 4 to 5%, you wouldn't be too far wrong, although it does vary on a course-by-course basis. Bill C, thank you for your question. There are no people employed in overseas hubs. What we're looking to do is effectively seek to employ individuals to recruit agents in those geographic areas. So we'll be looking for agents to approach potential business-to-business opportunities with sports, drama academies, expat communities, etc. So there's no plan to open massive offices or bricks and mortar buildings overseas. We're just looking to recruit, if that makes sense. but there are no individuals overseas. Arvinder, thank you very much. Yes, we're open to a takeover offer. I think it's somewhat above the share price that is, but I say that somewhat in jest, in as much as all AIM companies are open to takeover offers. You can't get away from the fact that AIM companies are set for growth, and then fundamentally they may be acquired by bigger fish. But I hope you take that as a joke and not as an intention to accept an offer of any kind at this point. Clive S, thank you. Yes, the key word, Clive S, in your, would you ever consider acquiring a rival platform and nullify the use of that platform? No, there's no direct platform competing with us. We use a platform-based approach, which is using software developed by Adobe and Canvas and Microsoft. So we're not looking to acquire a direct competitor. When I was talking earlier about the acquisition possibilities, companies put a value on that platform, and that value is often very high to them and quite low to us. I hope that answers that question. Alan C. Well, Alan, I'm not sure how old you are, but I will tell you that I'm 60.
Can I butt in again, Barry?
Jackie, no, I'm going to effectively answer this because I'm in the middle of my "I'm too old to know" joke. But Frankie has signed up as a brand ambassador. I don't imagine to know how she will help us, but Jackie knows quite precisely.
I do apologise for butting in. It's a good question, Alan. I don't know if you know Frankie Bridge. She is very popular on social media. So let's just take a single channel. She has 1.2 million followers on her Instagram channel, and nearly all of those are parents of young children, and they care very much about education. So she's on her Instagram stories basically telling them about the opportunity that they have not to homeschool any longer in shutdowns, etc. So yeah, that's basically it. She's from the right demographic and she has a good following on social media.
Tim F, the churn rate for students, well, there's always churn within our business, obviously, as people come to the end of their secondary school life or even their further education life. I would not profess to know individually throughout the year our churn rate because it's obscured so much by the increase in students. Jackie, do you want to comment on that, or is that sufficient answer?
Yeah, I think that's sufficient. I mean, you saw in the marketing strategy the piece on retain, particularly in Inter-High. But there is a natural churn, and there is, we offer termly rolling programs, but so we're naturally going to have that churn, but we are seeing it decrease because we now go down to year 4, and so what we're seeing is students joining in year 4 going right the way up to year 13. So that lifetime value, like I said earlier, is going up all the time.
Okay. Philip M, I can answer this one in respect of class size targets. How easy will it be to recruit the right caliber of teachers? We've recruited around 30 teachers in this summer, effectively, and we didn't have a problem because there is a queue of teachers who want to join Way, and that's simply because the growth in online is as relevant to teachers as it is to students. The ability to have a more flexible schedule, to teach from wherever, and we do have a commercial teaching contract. We don't just employ teachers as contractors. They're employed on the payroll effectively. So we haven't had a problem. We don't perceive a problem because we still have that demand. Also, I'd like to add that it's very appealing to a lot of younger teachers who are passing their PGCE, coming out of university, and are already in tune with online. Raz, thank you for your question. If the business is doing so well, revenue and profits are up, then why do you think the market and share price isn't reflecting this? There is some of the people may be on this call. Welcome, all of you, where there's an element of the Way share price that is based on some very reactionary purchases and sales. And fundamentally, I can tell you that the institutional shareholders are universally supportive of the strategy, as is the family of David Massey, to whom I'm close and have been for a long time. And so there is sometimes optimism and pessimism, and there's an old phrase, meet those two imposters just the same, isn't there? Which I think I'll use. But I think justice will out on the share price over the long term. There's been some short-term reaction in the market. And William P., how should we think about an EBIT margin? Well, I gave you WH Ireland's forecast earlier of, say, 10 million plus worth of revenues and, say, 1 million of PBT. Just like to take you through that. So fundamentally, our gross margin, as Barry said, is around 60%, but our overhead will flatten off. So we don't have a target percentage for EBIT. We also don't have a target for ROCE, but fundamentally, you should expect that the 60% margin will be maintained. That's our target to measure quality against revenue. You should expect that and I asked people earlier to think about splitting out marketing costs against admin. You should imagine that leveling off against admin, and that would allow you to make projections that we don't have in the market, and that's why I don't want to put a figure on them. That's how you should imagine how the EBIT margin should grow over time. I believe, Mr. Brotherhood, that I've reached the end of the questions.
Thank you very much indeed. You've been very generous with going through, well, I think pretty much covered off every single question. But of course, if there are questions that come in, the company will review those submitted by investors and publish answers on the platform where appropriate to do so. So thank you very much for that. Jacqueline, just before we direct investors for feedback, perhaps I could just ask you just for a couple of words to wrap up, if possible, please.
Yes. Well, I think, like I said earlier, we are exactly where we need to be. There will be further investment. You can't get to the size of a multi-academy trust without that, and now is the time to do it. We have that market opportunity. We wouldn't be able to do it further down the road. So we'll be doing it this year and next year, but we will achieve that vision. Like I said earlier, everything that we've said that we do, we deliver on, and we will get to that vision by the end of the 3-year period.
That's fantastic. Thank you all. Thank you, Barry, Jacqueline and Barry, for updating investors today and for taking the time to answer pretty much a whole long list of questions. I'm sure investors appreciate that greatly. Could I ask investors not to close the session, as you will now be automatically redirected for the opportunity to provide your feedback. If you've accessed the meeting from the website, the feedback page will appear in front of you. If you've accessed it via the link in the email we sent you, you will be asked to log in to submit your feedback. On behalf of Way Education PLC, we'd like to thank you for attending today's presentation. That concludes the session, and thank you very much indeed to you all.
Thank you.
Thank you very much.